I can't change the direction of the wind, but I can adjust my sails to always reach my destination. Good evening everyone. I am your speaker Neerav Shah and welcome to the Jambi's stock market training class. Now let's first take a look together at today's index. Nifty ends nearly 1% higher after choppy session. Bank Nifty back above 48,000. IT stocks stayed firm after a softer than expected US April inflation print fed hopes of a rate cut by the Federal Reserve in September. Sensex and Nifty 50 ended nearly 1% higher on May 16 after a choppy session, recovering firmly from the day's lows. Nifty showed a sharp surge in the last half an hour of the weekly expiry session. Now we will talk about IPOs, company name and offer price range. Rulka Electricals Limited 223 to 235 rupees. What Foods India Limited 48 rupees. Go Digit General Insurance Limited 258 to 272 rupees. Quest Laboratories Limited 93 to 97 rupees. Indian Emulsifiers Limited 125 to 132 rupees. Also we will talk about indices overview, index name and percentage change. Nifty Bank 0.61% change. Nifty IT 1.66% change. Nifty Auto 0.56% change. Nifty 50 0.92% change and Nifty Pharma 0.58% change. Now I will tell you about industry indices. Banks, financial services and cement are fall. IT software, diversified, power, FMCG, pharmaceuticals, NBFC, auto, gas and petroleum, metals various, telecommunications, engineering, real estate, auto ancillaries, construction, defense, term lending, institutions and consumer durables all are rise. Okay, that's the general news for today. Now let's move on. I don't know if you still remember, but we have talked about the differences between retail investors and institutional investors before. Why is it difficult for retail investors to survive in the stock market? So, how can institutional investors manipulate the stock market? Today, we will focus on discussing how individual investors can avoid falling into traps set by institutional investors known as main force in the market. This will help individuals trade more safely and avoid potential risks posed by institutional players. The term collusion mainly involves using trading volume to manipulate stock prices favorably for institutional investors. This attracts individual investors to buy or sell. There are 5 common methods used for this purpose. So first method is accumulation. Using collusion tactics to suppress stock prices, then buying when the price is low. On the individual stocks candlestick chart, the stock often shows a continuous upward trend along the MA10 when it is at a low point. This indicates that there are institutional investors accumulating positions by raising the stock price. As the trading volume increases and the stock price continues to decline with consecutive bearish candles, it indicates that institutional investors are suppressing the stock price through large-scale collusion. During this period, the main features on the candlestick chart are: the stock price is generally in a low-level consolidation with occasional spikes and increasing trading volume. Additionally, institutional investors often use the sandwich technique for more frequently at low levels, with large buy and sell orders placed close to each other, creating the illusion of heavy selling and pressure and weak upward momentum, prompting individual investors to sell their stocks. Second method, marking up. Using collusion tactics to significantly raise the stock price, institutional investors employ large-scale collusion to create the illusion of market optimism around the stock, increasing expectation and reducing selling pressure when the stock consolidates at higher levels. During this period, individual investors often feel they can't buy at lower prices and need to place higher bids to execute trades. Looking at the order book, small buy orders often struggle to get filled, while each transaction volume noticeably increases in a rhythmic pattern. Both buy and sell orders for strong stocks are typically in the triple digits, and the stock price rises swiftly without feeling any downward pressure. As the upward momentum continues, the buying pressure from below increases rapidly, leading to a decrease in the number of transactions per trade. Since colluding to raise the stock price does not involve injecting additional funds like in accumulation, and with many individual investors following the trend, although there may be a rise in volume and price, the number of transactions per trade tends to decrease. Fourth, collusion to push up prices. Point number 3, shaking out weak hands. Firstly, because following the trend can be profitable, institutional investors often use collusion tactics to shake out less confident investors. Looking at the order book, during periods of market volatility, there is a noticeable increase in trading volume at both high and low points. This is because institutional investors use significant collusion to control the stock price and its fluctuations. Now let's move on to the fourth point: collusion to push up prices. After shaking out weak hands through collusion at high levels, stock experts remain bullish for the long term, and the stock price surged again with large trading volumes. At this point, institutional investors start selling off their holdings. Looking at the order book, we often see significant transactions at the ask price levels, like the second or third ask, but there aren't necessarily large sale orders visible at those levels. After these transactions, the buy orders are at the previous bid levels disappear or decrease significantly. This is often a trap set by institutional investors using subtle timing differences in placing orders to deceive unexperienced investors. Individual investors end up buying into sell orders that institutional investors had previously set, while those who buy from institutional investors are often just following the trend. Now let's move on to fifth point. Rebound collusion. After the main players have sold off their holdings and the stock price declines, many small to medium individual investors who bought in on the rebound are now trapped. Trading volume noticeably shrinks. Institutional investors seize the opportunity to use significant collusion to push up the stock price. However, they are not as aggressive as before. Large buy and sell orders appear and disappear suddenly. This is because institutional investors aim in colluding to push up the price at this point is simply to sell off the remaining shares at a good price. Now everyone understands the struggles individual investors face in market trading. Their vulnerability to manipulation and the ease with which they can fall into traps set by institutional investors. In fact, many newcomers to trading often fall into serious misconceptions, such as placing too much trust in news and both positive and negative information found on the internet, thinking they can find everything with just a Google search. They then follow the crowd, leading to significant losses. Regarding this point, I have previously explained to everyone that the stock market isn't just about technical analysis. The most crucial aspect is information asymmetry. Individual investors also lag behind institutions by one or several steps in terms of information. So, I ask all of you, how can individual investors make money under such circumstances? I will address this shortly, but for now, let's first see how institutions mercilessly laughter individual investors. There are three common actions institutional investors take in the order book: sweeping the book, expanding positions, and collusion. So now, the first point: sweep order. During the initial stages of the stock price, large buy orders may suddenly appear, consuming all available sell orders in the placement order. This phenomenon is known as sweep order. It involves aggressively buying up available shares and can be a sign of institutional accumulation or fund buying activity. Sweep order is often a planned accumulation strategy, so it doesn't cause the stock price to rise too quickly. Instead, it tends to result in a pattern of advancing 3 steps and retreat 1 step in the stock price. Point 2. Check out weak hands. When a stock is on a normal upward trend, if there is a large buy order on the bid side but no significant sell order, yet suddenly a large sell order appears, pushing the price down, only to be quickly pulled back up after reaching a low point. This is typically institutional investors engaging in collusion to shake out weak hands. Then the stock frequently forms long lower shadows recently. There is a higher likelihood of it being lifted upwards later on. Shaking out weak hands doesn't necessarily mean the main players are still accumulating. Its main purpose is to take out unstable investors, namely those with profit positions, and attract interested investors to improve the market's average holding cost. Now, third point, collusion. Collusion refers to the main players using multiple accounts to simultaneously buy or sell, artificially pushing the stock price up or down to profit from it. If the stock price is at its peak during this time, it may be for selling or holding if the middle price is in the middle. It may be for expanding positions or testing the market if the price is at its bottom. It may be for suppressing or accumulating shares. Additionally, collusion can increase trading volume and create traps with large trading volumes. After understanding how institutions slaughter individual investors, I am sure everyone has a question in mind. So how can we as ordinary investors make money, and how can we avoid these traps? This method is actually quite simple. We just need to adopt a mindset of if you can't beat them, join them. Regardless of what individual investors do, we can't match institutional investors in terms of funds, resources, technology, or even information asymmetry. So why not take a different approach and join them? Let's turn their advantages into ours. Of course, when opportunities arise, we must seize them and strictly execute our strategies to stay undefeated. Now let's take a look at the current plan and arrangement for our Jambi's profit plan in the 4th phase of Wellstrom. Just follow the execution, everyone. Currently, our profit plan for Wellstrom has reached approximately above 200%. With this achievement, I believe we will soon enter the 3rd stage. The rapid accomplishment of our goal is attributed to everyone's trust in us and strict adherence to all instructions. Next, let's take a look at the benefits that everyone can gain in Jambi's 4th phase of the Wellstrom profit plan. Firstly, there will be periodic rebates. In 2024, Jambi Institution launched a new partnership plan with retail investors called Wellstrom, aiming for total profit of 480% and above, divided into 3 stages. The first stage aims for a profit target of 100%. The second stage aims for a profit target of 280%, and the third stage aims for a profit target of 480%. This trading plan signifies a long-term mutually beneficial partnership between Jambi institution and individual investors aimed at expanding into the Indian investment market. The program progresses through 3 stages, which primarily involves accumulating funds through UC and BT trades to achieve wealth growth and prepare for the subsequent stages. I am sure everyone is aware that the first phase of our wealth from profit plan has been achieved. Those who haven't claimed their rebates yet should hurry up and contact me. The rebate for the second phase is 10,000 rupees, and for the third phase it's 1 lakh rupees. But there are still a small number of friends who haven't strictly followed the instructions. If the strategy isn't adhered to, actions will be taken on their accounts. Please cherish this wealth from profit plan. Secondly, there is the recruitment plan. Dear friends, we are a professional institution deeply involved in studying profitable strategies in the stock market. We are committed to exploring market trends, identifying investment opportunities, and providing practical profit-making strategies to investors. To expand the influence of our institution, we sincerely invite aspiring individuals to join our team of market partners. If you are passionate about market expansion, skilled in interpersonal communication, and eager to explore new opportunities in entrepreneurship, we welcome you to become our market partners. So let's move on to the first point: market partner recruitment plan. We encourage every market partner to actively refer members to learn about our institution and invite them to participate in our programs. As long as the referred members agree with our institution and culture and successfully join us, the market partners will enjoy corresponding profit sharing policies. So, market partner levels and profit sharing standards are as follows. First, Junior partner. Successfully introduced 3 people to join and enjoy junior profit sharing benefits and receive 1,000 shares as a gift. Second, intermediate partner. Successfully introduced 5 people to join and enjoy intermediate profit sharing benefits and receive 2,000 shares as a gift. Third, senior partner. Successfully introduces 10 people to join and enjoy senior profit sharing benefits and receive 5,000 shares as a gift. 4. Special partner. Successfully introduces 20 people to join and enjoy special profit sharing benefits and receive 12,000 shares as a gift. Second point, self-owned trading fund pool and source of profit sharing. The profit sharing comes from our institution's self-owned trading fund pool. This fund pool mainly consists of 30% of the profits paid by clients to the financial department of the business school aiming to achieve resource sharing and win-win benefits. Third, allocation method of self-owned trading fund pool. To ensure the fair allocation and efficient utilization of the fund pool, we have formulated the following distribution methods. 30% of the client profits are allocated to the financial department of the research institute. The specific purposes are as follows. First, 10% allocated to foundations related to social welfare such as children's rights and women's rights protection. For social welfare undertakings. Second, 10% allocated to cooperative funds or brokerages. Institutional resources are not provided for free. And the third, 10% allocated to the business school to expand the self-owned trading fund pool for future profit sharing among partners from the fund pool. Now, thirdly, advanced membership qualification. From March 2024 to June 2024, Jambi Research Institute will organize events in India for the top performing and rule-abiding members for the first 3 phases. Additionally, the 4th phase will accept 100 new investors. Investment projects include blue chip stocks, block trading, IPO subscription, allocations and more. In the 4th phase, we will accept 100 new investors divided into gold, platinum and diamond levels. Each level enjoys different privileges. If you want to join, you can sign up with me now. Gold tier, allocation of 50%, equity ratio of 0.8%, quarterly profit of 500%, limited to 50 members only. And the platinum tier, allocation of 80%, equity of 1%, quarterly profit of 800%, but only limited to 30 members. And the diamond tier, allocation of 100%, equity ratio of 1.5% and the quarterly profit of 1000%, but only limited to 20 members. For the fourth phase, 10% of the bonus from the self-owned capital pool will be used for talented development, but the exact amount of Jambi shares owned by each level is not the same. They are respectively 0.8%, 1% and 1.5%. This share allocation of Jambi's own capital pool mainly comes from the equity ratio of the fourth phase, which is the third point in the dividend principle, accounting for 10% of the fourth period's own capital pool. First point, as a diamond member, Jambi will provide resources and integrate them. Next, as a member of Jambi, you can participate in offline meetings and sign equity agreements. And in the fourth phase, 10% of the equity from the self-owned capital pool divided will be used for talent development. Lastly, and most importantly, we offer a guarantee of compensation. If there are any losses, Jambi will take full responsibility and compensate by providing another super bullish stocks. So everyone must remember to strictly follow institute instructions to ensure eligibility for compensation and maximize profits. I am Neerav Shah on behalf of all the teams and individuals responsible for the Wealth from Profit plan at Jambi extend our gratitude to the beloved God and all the students who trust us. We promise to lead you all to the summit together. Finally, congratulations to all members who have completed the IPO subscription. This IPO is expected to yield a profit of 150%, which will directly propel us into the third profit stage. Alright, that's it for my sharing tonight. Thank you all and see you tomorrow. Good night.